Hello there, many thanks for joining us on our Monday Business News Report. It's now time to bring you the feature on the show today as we assess the state of the economy through the Consumer Price Index report, which measures inflation, and it says that it has increased to 15.92% on a year-on-year basis in the month of March. Now, the National Bureau of Statistics disclosed this earlier on Friday in its latest report titled Consumer Price Index March 2022 Report. It explains that the percentage reported was 2.25 percentage points lower compared to the 18.17% recorded in March last year, and on a month-on-month basis, the headline index increased to 1.74% in March. Now, this is about 0.11 percentage points higher than the rate recorded in February this year. The urban inflation rate increased to 16.44%, and in the same vein, rural inflation also increased to 15.42%, with a decrease of 2.18 percentage points from 17.6% recorded in March. Now, similarly, the composite food index rose to 17.2% in March, compared to the 22.95% recorded in March last year. Now, the agency also blamed the rise in the food index on increases in prices of bread and cereals, food products, potatoes, yam and other tubers, fish, meat, oil and fats. Now, on the all item less farm produce or core inflation, which excludes the prices of volatile agricultural produce, the highest increases were recorded in the prices of gas, garments, cleaning, repair and hire of clothing, shoes and other footwears, clothing materials, other articles of clothing and clothing accessories, liquid fuels and other lubricants for personal transport equipment and other services in respect of personal transport equipment. Well, joining me now virtually to discuss this and much more, looking at the state of the economy and the analysis from the perspective of the Consumer Price Index, which measures inflation, I have with me Michael Ilo, an economist. Thank you very much for joining us on the Breakfast Show this morning, and happy holidays to you.
Happy Easter, David. Thanks for having me.
Now, let's start off this conversation with the inflation rate increasing to 15.92% on a year-on-year basis in March. Now, when we're looking at the month-on-month comparative analysis, the headline index increased by 1.74% in March. This is about 0.11 percentage points higher than the rate recorded in February this year. What do you make of the inflationary pattern we've seen so far in the first quarter of this year in the country versus the spike we've also seen recorded in the likes of the US, England, China, and even Japan amid the Russia-Ukraine crisis and its ripple effect on world economies? Take, for example, imports.
Well, I think what is of utmost importance that we can see there is the pattern. Even when other economies were a bit more stable inflation-wise, Nigeria has been growing steadily. Some people have called it stagflation. That's where you have a stagnant economy and skyrocketing inflation. So at the end of the day, we are susceptible because we are an import-dependent country. At the end of the day, we are importing wheat, about 6.5 million tons of it annually. We are not the only one. Most countries in Africa depend on imported wheat. And between Russia and Ukraine, about 29%. I think Russia alone is about 18% of global export of wheat. Ukraine has another 10% of it. At the end of the day, if we are not producing enough to consume, we are going to be susceptible to the shocks from everything that is happening around us. The sad story is that at the end of the day, we are an oil producing country, and at the end of the day, anything happens in international market, we are usually negatively affected. This should not be the case. As far as food is concerned, a lot is still dependent on the peace that the farmers have when they go to the market. If they are not able to produce, the challenge of that is that whatever issues you are going to be having is going to be lagging by about 3 to 6 months. That's when it takes to produce items from the farm. So if we have a problem today, we might not know. 6 months down the line, we begin to see the octopus rear its ugly head. That's why they are telling us that if we are not careful, another 5 billion people in Nigeria will be pushed down the poverty line. That's where we have ourselves. It's a catch-22 situation, and only a good policy and a good execution can bring us out of it, David.
Definitely, sir. Now, let's also look at the fact that you've also made mention of wheat imports. Now, the Russia-Ukraine crisis definitely has exacerbated the inflationary pressure on global food prices affecting wheat imports. And we've even had much more disruption when it comes to oil and gas imports. Yes, the food inflation for the country remains at double digits at 17.2%, which is worrisome. But however, are you not surprised at this smaller margin of increase of 1.99% comparing it to the February figures? Most analysts had predicted earlier that we would see a bigger margin of increase, especially on the back of fuel scarcity, power issues, and then gas as well, how this also affects manufacturing and food production in general. What are your thoughts around this smaller margin of increase we are seeing for the month of March?
Well, as an economist, I will tell you that I'm not much surprised that we have a smaller margin. He who is down needs fear no fall. The consumer ability, the ability of the average consumer to purchase things has drastically reduced over the years. So when you are almost down, it's going to take a lot to have a substantial increase. One thing you have to realize is that some of the items that we go to the market, it is the producers now, the manufacturers that are taking a hit for the cost of increased cost of raw materials because they are afraid of passing the cost down to the consumers. For example, if you run an hotel business and you have been having to pay triple the price for diesel, which is used to power the hotel, at the end of the day, if you can't tell the average hotel guest that, okay, I'm going to be increasing price because even as it were, the demand is low. So you have to be careful how you manage that, among other things. So the people are in a way, they are at the lowest ebb of wherever it is they can find themselves. So the producers have been conscious of that, trying not to push them down the cliff over. David.
And now, in terms of what we also expect in the coming days, the Monetary Policy Committee of the CBN took the stance of retaining rates in its first meeting for this year. To what extent do you see this influencing the inflationary pattern until the next decision-making timeline? And what's your forecast for the month of April and the overall quarter for the second quarter of this year? What's your forecast?
Well, my impression of CBN policy is they are trying to be neutral to mildly negative in terms of controlling forex outflows from the country, just to make sure that we don't go under. But it's of note that CBN just a year or thereabout ago said they are projecting to have a single-digit inflation between 6 to 9% before the end of 2022. So if by first quarter we are still having 15, 16%, I doubt where we are going to be reaching that conclusion. And it's about time they kind of changed their outlook because you can't be waiting on second or third quarter before you tell us that whatever projections you made in 2020 or 2021 is not working again. CBN has tried in terms of trying to push money, trying to push resources into different sectors of the economy. But the strategic fit is not there. And that is why we are having issues. We have good intentions, but policy-wise, but when it comes to doing the nut and bolts of all the things that are required to make sure that this thing delivers dividends in terms of quality of life for the people, we find out that we are found wanting. Government, like I always say, still has the ball in its court to do the needful. We can still achieve a single-digit inflation within the next 3 or 4 quarters. It starts with cost of borrowing, increasing the productivity nationwide, among other things. Security, too, has to be looked into. So these are the issues that if we contend with them, I'm sure we'll get some results.
But do you think we are going to have a new projection from government? Because at the start of the year, we saw government peg the inflationary pattern, the average rate for this year to be pegged at about 13, 14%. It's not far off from what we have here right now at 15.92. Do you think we'll likely see a shift, especially going by external factors beyond our control, which continue to influence how much of a pressure we see in terms of inflation?
Well, if I have to say something, it is the fact that the past is the best predictor of the future. If by anything we have seen before, I don't expect, even from an economic perspective, you don't make changes for the sake of changes. They've been trying to manage it. We have been running a reactionary kind of policies for the monetary and even the fiscal sectors. We're in a country where we use more than 500 billion, 30, 40, 50% of our income to service debt. then definitely we are going to be having issues. So government is just trying to survive, to live another day. They are not really doing anything for the next 3, 4, 5 years. So I don't expect any changes. If there's going to be any change, we've seen something in the region of 2, 3, 400 basis points. Other than that, there's not much that can be done.
Okay, Mr. Elo, just before I let you go now, I'd like to have your thoughts on what the IMF is also cautioning the federal government as well in terms of fuel subsidy as well. This is one of the elements making the budget also skyrocket. We have huge budget deficit, and it's expected that we'll see at least 4 trillion naira being spent on fuel subsidy. How do you think government can slim down this budget with this reality that we are heavily dependent on oil imports?
I think government has made a policy decision, and that is the fact that, okay, they cannot take away subsidy at this instance. The cost of that decision is huge, and I don't envy those in government at this time. They just have to put the people on their side. The way I see it, there's a lack of trust. There's a trust deficit, as they call it, between the government and the people in governance. So they have to bridge that gap, so that whatever it is, whether it's to remove subsidy, whether it's to show up the value of the naira, whether it's to look for inward production of the energy that we need in this country, government has to make sure that all stakeholders have to be brought on board and made to see the light and seen that, okay, this is the problem we have, this is unsustainable. Until we get there, we have to live with the consequences of having subsidy and paying for it even through our noses.
Thank you very much for your time on The Breakfast Show this morning. It's been a pleasure speaking with you, Mr. Michael Ilo, and do have a wonderful holiday.
Yeah, same to you, David. My regards.